it's going so similarly at the moment that it's almost scary in some ways. So that when you look at just like the BTC 4-year cycle market cap, you put the halvings in, you have this nice chart. In that chart, it kind of looks very similar where, oh yeah, we again like did like a 70-80% bottom, and then we're again at all-time highs. And it's almost scary how same that side has been in a way. But with that also, so far at least, the rest of the industry has been like, there's been a lot more dispersion in returns. So if you've been investing in the Ethereum ecosystem, the things you expected to kind of be the leading things in your portfolio obviously haven't done that well. If you've been doing the same thing on Solana, it has. And overall, like there has been these themes like AI or meme coins or whatever, like kind of like jumping out one at a time in a way. And it's kind of been like chasing this hot ball of money in a way. So it has been a kind of a very weirdly similar cycle.
Welcome to another episode of the Deco podcast. I sat down with Mika Honkasalo, an investment partner at Equilibrium Labs. Mika and I had a brief overlap with our times at the block, and he was one of my go-to people for everything related to DeFi. His journey is interesting. He started from basketball analytics and ended up in DeFi. In the episode, we explore Ethereum plus L2s versus Solana, the theme that has been going on in the market for quite some time. Mika breaks down how Solana is focusing on reducing latency instead of increasing throughput like all other chains are. We dive into fundamental investing in crypto. He shares his views on treating crypto projects as cash flow businesses, something like Ethereum or Maker or Aave, instead of treating them as money. Lastly, Mika challenges the notion that is shared by many in the industry that this cycle has not produced anything groundbreaking. He argues that incremental improvements and optimizations may be the real driver of progress in this cycle. I hope you enjoy the conversation. Alright, on to the episode now. Alright, another episode. I'm sitting down with Mika Honkasalo. He's currently working at Equilibrium Labs as an investment partner. I used to work with him at the block, I guess a couple of years ago. Post that, I think he moved to Parify, I moved to Deco, and now he's investing with Equilibrium. So while I was at the block, like Mika was one of the go-to people as far as anything related to DeFi. Like I was pretty new, like full-time into crypto, and if I had questions, like Mika was one of the people who used to help me out. So like, welcome to the show, Mika.
Thanks. It was the good old days of the research day. Kind of like I remember we had like a pretty fun group there, and a lot of people have gone on to do like pretty cool things. So it's been fun.
Awesome. Like if I've left anything out of your intro, like just feel free to fill it in, like through your journey, probably in crypto as well as like prior to crypto, anything that is helpful.
Yeah, sure. I guess I have like a bit of an unconventional background. I studied computer science at university, if one can call what I did studying. I kind of like dropped out to work on like basketball statistics and did some like writing about basketball analytics for USA Today's Hoops Hype and a bunch of other big sites. And I actually thought I was going to kind of go that direction, work on a like NBA analytics stuff or something like that. But that's also kind of the same time I got into crypto, watching videos of like Andreas Antonopoulos and Eric Voorhees and the kind of good old Bitcoin days. And then kind of slowly started getting into it more. I guess really how I got like professionally into the industry was during DeFi summer, I did like a liquidity mining calculator that kind of everyone used. It was the compound and then like balancer after that, kind of optimizing your yield farming. And that's kind of how people found me at the block, came to the block, did a bunch of like work on the research side there. It was also a really helpful time because it gave an opportunity to really learn the ins and outs of kind of every protocol and how everything worked and really just spend time thinking about all this stuff. From there, I went to Parify. I was on the investment team, great firm. They were like investors in a lot of the early DeFi protocols like Uniswap and Lido and so forth. And from there, I went on to start Access Protocol, which is like a subscription protocol on Solana that's used by like the block, CoinGecko, and like hundreds of like individual creators to kind of monetize their work. But yeah, kind of out of all of these like research, building stuff, I think the most satisfying parts I found was like the investment side. And there was thinking about starting up a fund. I knew the people at Equilibrium kind of well personally. And they had this unique engineering team with like 80 engineers working on all of the core projects in the industry, like Starknet. Right nowadays, like Celestia and ZK Sync are clients of ours, and they wanted to build out their investment side. And I thought we could build like something pretty unique in the VC or investment space by bringing on an investor who is like much more hands-on in terms of engineering. And yeah, that's kind of how I ended up here.
Awesome. Like we can talk about crypto and everything, but I want to double click on the basketball thing.
Yeah.
Like what was that? Like how exactly did the transition pan out? And was that helpful when you were talking to Larry? Because like I know that he's represented his college and all in the US.
Maybe in some ways, I guess the kind of biggest overlap was there's a lot of like these kind of in the early days, there was like this prediction market called Augur, and a lot of like kind of people in that prediction market space, and like people in the sports betting industry kind of always got into crypto actually kind of thinking that this is a killer use case. And it's funny that we've only seen like polymarket success kind of 5-8 years like after that era, but that was always an idea that people had and who kind of worked in that space. So I think that's how I also got into like the non-BTC side of crypto in a way. So I would say there's kind of like overlap there in terms of interest and actually in terms of people as well who've gone on to work in crypto.
Awesome. Yeah. So I understand that you were in Singapore for the week. So we are recording on 24th of September. Previous week, I think Nick was in Singapore. So like any interesting tidbits for us or for me? I mean, I wasn't there. So
yeah, I mean, I'll say that like, especially kind of from the Solana breakpoint side, if the 2023 breakpoint was a lot about kind of, okay, we're not dead, we're being underestimated. 2024 felt maybe like, okay, steady, good progress is bullish, and it wasn't like anything crazy, but everything is kind of moving forward in a healthy way. So the first signs, I think, are that kind of institutional adoption where, you know, SocGen is bringing their stablecoin to Solana, PayPal was pushing their, BlackRock bringing their fund that's on Ethereum right now to Solana as well. If you just go through the product updates, like a lot of the main protocols like Jupiter, Drift, and custody things and multisigs and everything seem to be going nicely, very nice product updates, you know, and obviously Fire Dancer was probably the coolest thing out there. So that's kind of, and maybe the most impressive thing was that Fire Dancer is actually kind of on schedule, which for something as ambitious as that is kind of very rare. And yeah, there's also a mix of like, I would say entirely new ideas that I would say a lot of people have gotten recently kind of a bit tired. They feel like, okay, it's just many chains. You're kind of deploying the same things on all of these chains. But for example, like MetaDAO, which is like a decision markets thing that can be used for like more complex markets than Polymarket or used for DAO governance. For example, that's like a new idea that hasn't been on Ethereum before. So I think there was like a lot of optimism around, okay, the ship is going in the right direction. Nothing like sort of too bubbly, too like crazy, but the steady progress is being made here.
All right. And anything on the non-Solana side from Token?
Yeah, I mean, there was Token is obviously kind of a conference that's more businessy, more and less kind of on the dev side. But overall, I would say that the kind of institutional adoption of stablecoins seems to be a big theme where you see a lot of this kind of thing where, okay, you're integrating Euro or USD stablecoins into like banking and stuff like that. So I would say that side, it kind of looks very positive and overall, like the adoption is happening slowly. Crypto has always kind of been in this case where there's not that much consumer adoption yet, but kind of step by step, the different concentric circles are growing and yeah, we'll see where it goes from here.
What do you make of Maker or Sky's move to Solana or proposed move to Solana?
It's worth noting that it's not really like fully moved or anything like that to Solana. It's just kind of pushing more a new version of DAI, the USDS, kind of on Solana. And I think that makes a lot of sense. Solana is kind of a blue ocean there's not really like that kind of native stable coin there and positioning for Maker to try to get into that market. I know like Rune, for example, has been very interested in the SVM stack as well for kind of building out Maker in the future. So it's a very natural thing to go where a lot of users are. And yeah, I think there's like a good market opportunity there for someone to be, because there's always like there's a main stable coin, which is like USDC and USDT, but then there is kind of like these decentralized ones, and Solana doesn't really have like its kind of own big native one. So there's a great market opportunity.
All right. Should we talk about Thesis at Equilibrium? Like whatever broad strokes that you can give us.
Yeah, sure. I guess to kind of maybe paint the big picture first, their investors historically, I think, in the space have had like a lot of these different lenses by which they view what kind of crypto and blockchains are. And that makes sense because it's a pretty fundamental technology and it can influence different parts of society. So if you're kind of more ideologically inclined, it's been about kind of data ownership, privacy, and decentralization, self-sovereignty. If you take it kind of like a legal perspective, a lawyer perspective, you can think of it as a new way of building out contracts where instead of legal agreements, you have smart contracts, and those enforce the rules of how businesses operate, how the cap table is structured, all of that kind of thing. If you ask an engineer, you might make the analogy to kind of open source and the network effects around that, and then how blockchains bring this open database, open state aspect, which can also like drive network effects in a really fast way because there's this new way of building applications. If you kind of take the economist market view side, then you can think of it as like, oh, this is an efficient way to build businesses because they're global, they're open. You take out the rent-seeking middlemen and you kind of make efficient markets through this. So I think like a lot of those thoughts have kind of influenced me personally in my thinking. But then as a firm, I think we very much take the kind of, since we're an engineering first organization, we take the developer lens where what we're looking for are kind of the best technologies that other developers want to build on. What are the most efficient ways of accomplishing a task? And that's kind of like the software side that we care about. I would say we also kind of probably, compared to other investors, really look at I think of this through hardware a lot more, where if you think about what crypto has been really good at, it's kind of distributing out hardware into the world and having people use that hardware. Like Bitcoin is a good example of this. It's like a really large, really powerful network of people running SHA-256 basically all day long and burning a lot of electricity to do so. And then even like something like Solana, it's kind of like hardware optimized for like small transactions, small data transfers, basically at like light speed across the world. And then like a lot of the successes I think you've seen, like Helium, for example, recently has been growing a lot. That's like a task-specific hardware of like Wi-Fi networking, basically. So like we take a lot of like care about the hardware in a way a lot because that's really what pushes performance ultimately. So the software side is kind of like what's the right pieces, and then the hardware side is really like getting everything out of those pieces. And yeah, that's kind of how we approach the entire market in many ways.
Right. You mentioned something interesting, right? Developer first approach, whereas you're looking at technologies that are good and so on. But is that always enough? Like an example that comes to mind is Starknet or Starkware, like probably some of the best cryptographers and like scientists in the world looking at ZK tech in general. But in terms of adoption, like we would say that it has missed the mark so far, right? So how do you look at that? Because software elements do seem like they are important as well.
Definitely. I would say that they're kind of, obviously it's important what you accomplish with that tech. So ultimately, like if you're building an execution layer where you're having like lots of transfers, lots of payments and swaps, what you care about is the efficiency of that particular activity, that it's low cost, it's low latency, and that you have a lot of capacity to do so. And maybe the ZK tech that has been geared quite towards that so far hasn't been yet what users really care about or want to use. And then for that technology to really make an impact, maybe you'll see it. Like ZK is a huge theme for our company. And I think the way you probably see it actually quite a bit more is, okay, you have like these execution layers where people are doing a lot of trading, like Base or Solana or Arbitrum or whatever. And then you start integrating ZK into those a lot more in like applications and to create like privacy and different kinds of mechanics for swaps and things like that. But then it doesn't necessarily give you an advantage on just like execution itself. And what those businesses, when they're building their L2, are building is an execution layer. And even though they're able to build like a very secure bridge in a way from Ethereum to Solana, because ZK is the best way to do that, that necessarily isn't the key component of the use case that you're tackling. So obviously, like, use case matters there, but you can take the kind of other route of this, which is that developers at that point weren't looking at, okay, who has the best ZK tech? They were just thinking, well, who has like the fastest tech so we can deploy our DeFi applications on? So still you're taking that developer perspective, but you're taking it in like a practical sense, much more than a theory of what might work.
Makes sense. Yeah, like, how do you think of this cycle, if we can even call it a cycle at this moment, compared to the previous ones in 17 and 21?
There's definitely an element of it's going so similarly at the moment that it's almost scary in some ways. So that when you look at just like the BTC 4-year cycle market cap, you put the halvings in, you have this nice chart. In that chart, it kind of looks very similar where, oh yeah, we again like did like a 70-80% bottom, and then we're again at all-time highs. And it's almost scary how same that side has been in a way. But with that also, so far at least, the rest of the industry has been like, there's been a lot more dispersion in returns. So like, if you've been investing in the Ethereum ecosystem, the things you expected to kind of be the leading things in your portfolio obviously haven't done that well. If you've been doing the same thing on Solana, it has. So and overall, like, there has been these themes like AI or meme coins or whatever, like kind of like jumping out one at a time in a way. And it's kind of been like chasing this hot ball of money in a way. So it has been a kind of a very weirdly similar cycle. And you could say that early bull markets previously have also been one where BTC dominance goes up. And then eventually there's this point where it kind of like you start chasing that beta. But to a large extent, it probably comes from the fact that no new capital really has been allocated into the industry except for BTC via ETF. So that kind of grinds up the price in a way. But then if you look at like the Ethereum holder base, it's not like there's a new natural buyer that has come into that in a sense. So the kind of large positions already have been allocated in a way, and there was no next new buyer so far that has kind of like changed that dynamic. So I would say kind of very similar to date in terms of cycles, but yeah, like a little bit different as well in terms of how difficult it has been to generate returns on like, or outperform BTC at least.
Right. And do you think, like, I mean, it's just kind of preponed in terms of previous cycles, right? This cycle, I mean, we saw all-time highs like before the halving itself. I don't know, maybe like 6 to 8 months earlier than previous trends. And this was largely due to the ETF, right? I mean, and like, could we make an argument that these people don't really care about the long tail of crypto except for BTC and to some extent ETH?
I think that's definitely true. And if you look at the ETH, ETF flows are quite small at the moment. So it definitely looks like that. I would say that's also a part of kind of that the maturation process of that investor base in a way, where I think a lot of people in the crypto industry also came through kind of like BTC first and then kind of worked their way through the long tail of assets. So if it looks like the kind of other networks have some semblance of product market fit, and you see kind of these use cases like Polymarket or just trading or whatever kind of grow, then you'll see that activity kind of eventually make its way further down the line, especially as when there's like kind of a clear positive bull market in a way. That's where people always tend to look for beta as well. And like historically, the longer tail assets have been beta to BTC. So I think it's just a natural maturation process for those investors. So it's kind of your first step into crypto. But then if the industry is able to produce something of value elsewhere, that money will find itself there eventually as well. So it's just a process.
And like, what is the catalyst there? Is prices increasing because of overall high levels of BTC? ETH itself is a catalyst, or you think that there will be some kind of an application or a consumer application that is a breakout success and that brings more people and attention, like brings TradFi's attention to long term?
To an extent, it's very reflexive, of course, especially if you look at DeFi. You have these things are more valuable. You have more TVL, you tend to have more activity around that. And I would say among investors recently, like this kind of fundamental investing has been more popular as a topic in crypto than ever before. And that's kind of looking at the cash flows and the structure of these businesses and how much money they're making. That's probably still the wrong lens to look at crypto, because what you're investing in is growth, with the idea that eventually these systems will be used for like by billions of people for all kinds of different tasks. Now, where exactly that comes from is still, I think, a question mark quite clearly, where you see like these pockets break out where, okay, like BTC institutional adoption is one. DeFi to an extent, like there's much more institutional activity on Ethereum DeFi than ever before. It's there a little, but it's not like kind of really breakout application. You do see a lot of like these activity in like Latin America or something around how much USDT is it used there in like day to day. So that's kind of one. Polymarket is also one. Helium is one. You have like these concentric circles of these different pockets, kind of like trying to make headway into product market fit and trying to make headway into usage. And the kind of combination of all those, I think, will be eventually what drives this kind of forward. And so there will be breakout consumer applications. That's why gaming has probably been such like, nowadays it's not popular, but there was this beautiful, like sexy allure to it in a way, because that feels like a very, very internet native business that you could build. And it felt like that's a big concentric circle of users to bring onto these systems that you didn't have before. Now that didn't like pan out in its first iteration kind of at all, but something like that is probably still there in the pipeline. So I think it will be more, instead of one breakout application, it will be kind of making incremental progress on all of these fronts. And that builds you network effects. You know, if you have an application that brings in 10,000 users onto Ethereum, well, then they're likely to discover something else. And that's kind of, and you start to build out wallet infrastructure that's better to fit those users. And okay, that means that probably transfers over to some other use case and so forth. So it won't be like this kind of 0 to 1 moment, at least for a while. I think it will be more incremental and kind of making progress on these fronts that are already what the industry is talking about.
Do you think over financializing games was the single most important mistake that we made?
I don't know if it was the biggest mistake we made. We are an industry who is very capable of making lots of big mistakes, but it certainly. This is not a very uncommon analysis, but these games weren't at the level of quality that big games tend to be. It's actually very difficult to build very popular games. It's a very crowded market. So nothing was just good enough to kind of cross over that hurdle. But I think you'll find that the way this moves forward is also maybe not, there's not like a game that gets 100 million users, but maybe there is something that gets like 20,000 and it's a loyal community. And then you kind of build on from that, kind of like these concentric circles that I talked about, like slowly build up. So yeah, the first iteration of those, it's kind of the first iterations, everything is horrible. You know, the first iteration of ICOs was pretty terrible. The first iteration of like Bitcoin forks of like Litecoin and Bitcoin Cash, that wasn't very useful to society necessarily. So the first version of everything is always bad, but then you kind of get on the slope of improvement. DeFi went through this where everything was farming these coins that were related to food at one point, and that probably wasn't like the most beneficial thing to society. But the core DeFi protocols that came out of that, like Aave, for example, they are building and they're growing nicely. So everything's kind of going in the right direction.
Come on, I thought Litecoin was silver to Bitcoin's gold.
Yeah, I won't comment on that more.
Right. How do you think of liquid versus venture investments at fund, or like you don't really bother too much about?
Overall, the market has been ever since the ICO, basically the biggest arbitrage in crypto, and it is like a pure arbitrage, has been between the private and public market. And so it's natural that capital allocators are focused on this and continue to focus on it. Eventually, this trade will run its course, and one could argue that it already has run its course, where it's probably very difficult for venture funds to outperform BTC on average. Although it should be said that even in this case, there is still this opportunity for that 1000x in a way in venture in private markets that it isn't in the public ones normally, because just early access to the deal, you're buying it at a lower valuation. So there is like some mechanic there, but just from an expected value perspective, I think the liquid markets have probably overtaken the private ones, and VCs on average, and more importantly, maybe even their LPs to those VC funds are probably pretty slow to adjust. So you need to see huge winners, because there's more of these like liquid funds nowadays. You need to see them have huge winners really to get the entire ecosystem to change their mindset of, okay, we'll do these private deals at low valuations and we can sell them at high valuations in the public markets. So yeah, that dynamic really requires like kind of it has to be a situation where kind of anyone can see that happen. And before that really happens, you'll be just massively over-invested onto the private side, which I think is the case right now. And from what it's worth, like from Equilibrium Ventures, we don't really like care about that at all. And we just we don't care if it's public or private market. You look for the best investments. You want to back great founders, building good businesses, and the structure of the deal, while obviously it has some relation to the way you're thinking about it, that's not the primary way to analyze the situation. And I think that's going to be an advantage for funds who are just able to look at each deal separately in terms of like, just because it's a private market 50 million valuation and you see something in the public market 50 million valuation, doesn't mean anything. And what you're just looking for is someone who will build something very cool.
Right. So I think we spoke to Arthur Chong from Defiance Capital, I think in the previous podcast, where he mentioned that like the AUM that VCs manage in crypto is already 3 times of the liquid funds. And, because of that, like, as you said, private market valuations have been getting higher and higher because more dollars are chasing the same deals. So by the time token launches in the public market, like there is no really incremental buyer that is left at those high valuations. And typically the price discovery that used to happen upwards now happens downwards. And since we don't have great products and price acts as one of the pillars of marketing for a project, and when that price has been consistently trending down in public markets, it kind of gets difficult for projects to wither that out. Like that's what like his thoughts were, and like interesting way to look at liquid versus.
That's definitely like 100% correct, I would say. And it's just a maturation of the market in a way where you understand why the VC market has veered so heavily towards the private side. It is because of historical returns. And then there is just this adjustment period that's natural. I think people think of like the VC market as of like these sharps or whatever, but it's not really like that. Like it's just like everyone else, and you have obligations to people who invested to you. You pitched a certain thing. The market has worked in a certain way. You're not kind of overthinking it, but the market eventually like forces your hand. So when you have these situations where the liquid funds actually perform a lot better than the private ones, that day that those numbers come out is the day when there's no more of this mechanic, and you immediately kind of switch up your behavior. So I think smart people like Arthur are probably taking advantage of the fact that you want to be the first on the other side of the trade in a way.
Correct. Shall we talk L2s? Like what's happening with Solana L2s and ETH L2s, and this fight between whether Solana L2s are L2s or network extensions and whatnot. What do you see like as the peculiar differences between the so-called L2s on 2 different networks?
Yeah, to think about this, you kind of have to understand first, what do the L2s do? And the L2s are, in a general sense, they're meant to, number 1, increase transaction throughput. Number 2, to lower costs. Number 3, decrease latency. And number 4, you have sovereignty around the sequencing rules. So you basically control MEV, right? So if you look at the kind of Ethereum L2s, they very much want to do all of those things. And Ethereum hasn't so far been, the plan hasn't been to make it the kind of home of execution in a way. Although you have seen people talk about being willing to change that. And I think that is the right direction for Ethereum to go. And I would love to see that. I would love to see Ethereum become more like be able to support more usage, basically. So if you look at the Solana L2s, it's a little bit different because number one, you're not actually trying to increase transaction throughput necessarily. Like the L1, especially with Firedancer, has really good throughput. So that's not the thing you're looking for. Not necessarily even costs as well. In theory, maybe, but like in practice, probably not. So what you are actually really care about is latency for that one. And that's where the Solana L2s are trying to do this thing where Solana block times are 400 milliseconds. Because you do consensus around the world, you're limited by the speed of light. That speed of light, you can't go faster than that, right? So there is this inherent limit that a chain will have and Solana will have, that it can't compete really in high frequency against like centralized exchanges. So what you do on top of that is you have this kind of quote unquote L2 structure, which allows you to basically do like without consensus. So it gets your latency down from 400 milliseconds to like 10 milliseconds. So that's actually very important. That's a 40x improvement and the kind of only way really to compete against Binance. So it is targeting that very specifically. Now, there has been like this negative kind of argument about what do you call it, network extensions or L2s. And I think that one ultimately comes down to UX. So if you look at like Solana L2s, at least like the good designs that I really like, there are ones where you don't actually, because in normal L2 land, you bridge over some funds and you have the liquidity and you deploy the programs on another chain. Like, for example, Magic Block that's building on Solana, it's a very cool idea where the liquidity remains on the L1 and the programs themselves are deployed on L1. So that you don't have like another chain as such, but you do allow the sequencer to make like state updates to your account. So basically to do stuff to your account, which means like trading or whatever in practice, you allow that to happen more often than that kind of 400 millisecond slot, but you can do it like in theory, like 40 times within that block. And then you can settle, not in practice, but in theory, you can kind of settle very quickly in like one block to the underlying chain. So when you do that, the experience kind of changes a lot, especially if you work with the wallet and RPC providers to make sure that this isn't like a thing where you have to add a new network and bridge over and wait 16 minutes. Instead, you're able to do like a fast deposit of just one block. You kind of like a Drift isn't even an L2, but Drift already does like deposit and withdrawal into their exchange. So it kind of feels the same way as that. And then when you come out of the exchange, you didn't really know that you were like on a different network in a way. And in that case, I understand why the Solana people are more willing to call it network extensions. And I think they're actually kind of correct in that if you get the UX to this level, which is much more doable, I think, for Solana L2s than it is on Ethereum, then there is no like separation between the L1 and the L2. And if you get there, that's very cool. And I think that's like when you start to be competitive against centralized exchanges for the first time.
Yeah, that's fair. So you think that like what kind of use cases are they targeting? I mean, HFT is definitely one.
Yeah, basically anything where you want to do kind of state updates faster than the global consensus 400 milliseconds.
Then the 400
will allow you.
Right.
So trading, of course, is a big part of that. Probably the number one use case, I would say. But then you can also think about like gaming use cases where you want to record an action, but you don't want to record an action like so slowly that it influences the UX. That's the kind of situation where you'd want to. But then from that game directly, you can still like go to like within one transaction, you can make a Jupiter swap and still kind of remain in the game because you just go make the Jupiter swap and then come back in. So that's more of the kind of idea that you're able to interoperate much better with what exists on the L1, but you do these like heavy computation tasks on L2. Overall, like it still remains to be seen how useful these are, but like some of these AI compute network use cases, that's where you offload a lot of the compute side onto like the L2 sequencer, and then you just kind of like settle whenever it's appropriate onto the L1.
Yeah, now that you mentioned, right, what do you think of crypto cross AI overall?
It's probably important to like categorize what exactly one is talking about there, because I would say on performance side, decentralized networks for AI and machine learning tasks, the performance just isn't there. There's no actual like kind of direct way to get performance to that level. But you can do like ancillary things. So you can do, if you're doing compute on like edge devices specifically, instead of like some powerful network, then a decentralized network can work for that. If you're doing some tasks that are like, there's a couple of these interesting things where you have like humans basically doing tasks that teach the AI models. That's where I think you can kind of do that very nicely on chain and use like the kind of token incentives and everything to grow that type of network. So I wouldn't say you're able to kind of do the most important core stuff in a decentralized way, but I think you're able to like leverage decentralized networks to perform some tasks that may be useful.
Like, can you give an example of that? Like what those tasks may look
Yeah,
like?
so like a good, maybe this is what humanity is going to. We're just like data input for these LLMs, but like you can, for example, do things like have a decentralized mechanical Turk. So that's like the Amazon kind of labeling service that they've always used, where you have people basically feeding stuff into the machine so the machine better understands what works. So you can have like a distributed network of people earning money and doing that. That's like one kind of basic way of thinking of that use case.
All right. Let's talk fees and revenues. And because you mentioned that increasingly fundamental investing is kind of coming back, or people are starting to take a look at it and notice it. I remember, I think it was in November 23 that you wrote an article on Solana fees. I mean, it was a short read, but it was a brilliant read in my view, because there were constant arguments on Twitter about how Ethereum rakes in so much of fees and there is no fee collection on Solana. And you kind of broke it down as to like I think it was a factor of 40x for Solana to break even at that point at about 5.7% token inflation rate. And you nicely broke it down as to how Solana can get there without raising the fees too much and driving users away, like what happened on Ethereum, and users were moved to L2s. Yeah, can you just unpack where we are, like, I think almost a year after you wrote that, and what's happening?
Solana's fees have definitely gone up quite a bit. And I guess the philosophy behind that piece was that people are overthinking the kind of fee structure of these things. And it's just, well, if you get a lot of usage, all of these numbers will look really good. So what you should do is get a lot of usage, and you can always tinker with fees, but based on the defensibility of what you're doing, like as a business, like how much are you able to charge, your customers. It's kind of like very basic business mechanics. But the number one thing of the business, it has to be useful, it has to generate, like, people want to use it for many different things. So that's the number one task that I think when people talk about like valuations right now, fee capture, if you think, like, for example, it's not rational to think that, oh yeah, we have to turn on the Uniswap fee switch because we have to get revenue from the system, because Uniswap's valuation is based on all of the future revenues that come, like it's the discounted cash flows of the future. And your idea, of course, if you are bullish about Uniswap, is that Uniswap will do 100 or 1,000, 10,000 times more volume in the future. So whatever fees we collect right now is not what drives the value of the token. What drives the value of the token is the fees in the future. Now, of course, it would be nice to see that you're able to take some fees somewhere and kind of figure out that, okay, these actually do work like businesses, but that's really like a comforting thing. It's not like mathematically true. Actually, mathematically true is that all the fees are in the future and you want to grow the business. So this is one of the most misunderstood topics. And specifically, I'd put like talk about like Solana inflation side. Whatever the inflation rate is doesn't matter at all. There's nothing about the inflation rate that influences like the value of the system. So you can think, for example, today there will be 21 million BTC. If tomorrow everyone's balances doubled and there was 42 million BTC, the value, it doesn't matter, right? You just hold the same thing. So what matters is money coming into the system and money coming out of the system. And for Solana, it's not the inflation rate that's the money coming out of the system, because like if you buy a liquid staking token or whatever, you can get a majority of that. You can actually get more than the inflation is right now. But the key thing to understand is just that the node costs for the operators, that's something that they have to cover. So that's kind of like your actual costs for the system. It's not the inflation that's the cost. It's the actually what it takes to run one of these boxes that participates in consensus and validation. That's the only thing that matters. And right now you're actually kind of making over that, because what you're gaining right now on Ethereum and on Solana is that and your returns are actually in practice driven by the fact that some people don't stake and a lot of the supply doesn't stake. So you're increasing your percentage ownership of the system over time. So yeah, the inflation discussion really bothers me, because the inflation could be like Ethereum's inflation could be 100%, but if it goes to ETH holders equally, it doesn't matter, right? It can be whatever number it wants. It's just everyone should think about it just as a percentage of what they own of the entire system.
So as long as you are able to participate in that, whatever, in let's say there is 7% inflation, and as long as you have a claim to that 7% in some shape, some way or shape, it doesn't really matter, right? Because you are also earning the same and everyone is earning the same. It's like growth rate of an economy, where as long as you make more than inflation, you are
exactly.
fine.
And you can think like, okay, if there's $100 worth of inflation going to an ETH or a Sol validator, and their actual cost of running that business is $1, well, the market forces will make it so that people will offer that service all the way up to that kind of 99-cent mark.
99,
and
right.
yeah, so you do. So the thing is, people don't actually know what the costs are very well. Like Ethereum, they're actually very low, so it's essentially free. Solana, they're not, but they're not that high either, where like it actually would eat out as like a real percentage of the inflation. Out of the inflation, of course, this is a simplified way of talking about it, because your stake size matters and all that kind of stuff. But it's like a few percent. So if you look at the liquid staking tokens, you're getting like 90 to 95% of the inflation back to you.
Right. Like, shall we talk a little bit about what is happening with Ethereum in general? Like, I think post Denkun or 4844, the fees have gone down by almost 98, 99%. And the L1 is not making as much revenue as it used to earlier. And, like the ultrasound money meme is kind of put on hold at the moment, because ETH is slightly inflationary at the moment. Yeah, so in general, like, is that, do you think, one of the contributing reasons? I mean, all the fragmentation and so on, one of the contributing reasons as to why ETH has lagged so much this cycle?
I would say that if you think that ETH is money, you don't have anything to be concerned about as such, because if you're fragmenting the execution into lots of different places, well, you just think ETH is money, and the execution revenue is not what drives the value of the thing. What drives the value of the thing is that it's like, well, whatever arguments people use, pristine collateral, the internet money, BTC competitor, whatever. And if you think that, you should actually be kind of very confident about the future of ETH in a way. If you don't think that ETH's value comes from like as money, but you think that it's more kind of like a cash flow business, which I would say I lean towards maybe a little bit more, that's where you would say that, okay, we gave away the most important part of our business to these L2s, which is doing the execution. And that obviously would mean that in some sense, the L2s are kind of undervalued relative to the ETH L1. If you are able to kind of find the individual big winner, at least in some abstract sense, that should be true. So if that's kind of the case, and I would be correct, my prediction would be one of these L2s grows in value to kind of be very close to ETH, or kind of like growing to that kind of level. So I would say that kind of thinking in the market has become more popular in a way. And it's just also a matter of dollars, where if you think that ETH is a good thing, but you've also invested in a lot of these L2s, you have a lot of capital going to those places. So that situation where there's no new capital coming into ETH, because it has been such a consensus position among people, that you kind of exacerbate that issue in a way. But yeah, so I would say, I don't know if I would call it a mistake, because that's kind of always been the Ethereum roadmap in a way. But what I would say is that it would be great if the Ethereum community gets on the same page on maximizing ETH as an execution layer. And I think that will happen actually eventually here. It's just a matter of like how quickly and what the competition does in the meanwhile. I would say all of these roadmaps ultimately, like people talk a lot about monolithic, modular. To me, there's no such thing really. People are just like essentially building the same thing just through different paths. And the different paths kind of require a different amount of tokens and a different amount of startups to make work. But ultimately, people are kind of building the same thing. And I think like the Ethereum L1 will will get in that direction as well, and that will be very healthy for it.
Was that John Charbonneau who wrote "We are all building the same"?
Yeah,
thing?
that's a great article, and I think essentially gets it correct in 98% of cases, I would say.
Right. So you said that you look at ETH as more of a cash flow business than as money, and I think even the Ethereum Foundation or Ethereum community, so to speak, is kind of divided on it. Why do you prefer one or the other?
This could be the lack of imagination from my part and kind of a lack of, because I'm also not the kind of expert on BTC, for example, yet that is by far the most well-performing asset just by market cap in the history of this industry. So the market is kind of telling me in a sense that one perhaps should care about that more. But it's definitely easier from like a tech investor side to just reason about how companies have always worked, how valuations work in the traditional sense. And when you get into the world of kind of like commodities or commodity-like money or money backed by different things, that's I think a wholly different conversation. But that's also to tie back to what we talked about earlier, kind of these different concentric circles where it doesn't matter whether or not, like, I think ETH is money or BTC is good money or whatever, because that's a use case that's like growing out there and it's bringing its own set of users, and that's kind of like growing the industry as a whole as well. So yeah, I mean, we'll see if ETH is money, and maybe the answer is it's some combination of like cash flow assets and money, but we'll see where exactly that lands. But I would say the people who are very, very confident about that, I think that you do run a huge risk on, okay, well, if it isn't money, then like the valuable part of the business was actually something else, but we'll see.
Right. I think for something to be money, consensus is absolutely critical, and it should be as simple as possible, right? I mean, the more convoluted a thing gets, the more difficult it is for people to come to a single view on it. And because there is this tech aspect of things in as far as Ethereum goes, and difference of opinions and way too much decentralization, if I can even call it that, the messaging gets difficult. Like if you look at the difference between the messaging around Ethereum and Solana in general, like Ethereum seems more all over the place and Solana seems more cohesive. Like everyone is kind of going towards that same message that, okay, we want to be decentralized NASDAQ that works at close to the speed of light, right? I mean, it's simple and people understand that. Whereas when it comes to Ethereum, like most of the people or investors may be at a loss as to what is it that we are trying to achieve. Do you think that plays a role?
Perhaps, but also these are some of the things that maybe we spend a lot of time talking about within the industry, but then ultimately how this plays out is, like what's the thing that 1 billion people are going to adopt into their daily lives, and there will be probably much less. I would argue that there's less. When that happens, there's going to be like less philosophical discussions in a way. It just happens, and product market fit is product market fit. So yeah, we'll see whether or not that happens for ETH as money. Maybe it does, maybe it doesn't. But like, yeah, like these discussions in the meantime tend to be like more academical in some ways, because ultimately the steamroll. The one thing I would like say is that if you have suddenly an application here that has 1 billion users on it every single day, there is no more thinking about what is modular, what is whatever. Yeah. Like it'll just be about that and in that direction. So we have too many of these kind of weird discussions on market structure and the tech structure in a way. Obviously not because you have to have those discussions to build the end thing, but I think the end thing, as long as there's no end thing that actually kind of reveals the truth to us in a way, then we're kind of like stuck going back and forth with these discussions.
So what do you think of ETH L2s and Ethereum aligned L2s in general? Like I remember your tweet where you said great ETH alignment for L2 would be airdropping majority of the supply to addresses based on how long consistently and how many protocols they have interacted with. And you said that call it ETH Maxi L2, and you shared a few more things that they should do. So yeah, let's just
unpack. Yeah, I would. This is an idea I think that's kind of an underrated one. I've pitched this every now and then to VCs, and they've been like, "Oh yeah, you want to do this? Like, I could fund you." It's actually a good idea. But basically, the idea is that in a lot of like these ETH L2s, I don't really think it's ultimately right now anymore the tech that really matters. It's the go-to-market. Like for example, Base is the most successful L2, and I think will kind of continue to be in the future. And that's because of Coinbase's distribution that they have. So, and ultimately, Coinbase is able to adopt whatever tech is like comes out of the market, like parallelized EVMs or some new way of doing like state root access or whatever. Like they'll just integrate that if it's good enough eventually into their own chain. So there's no real tech advantage, I think, in that kind of area, which means that you care about the distribution strategy. And I think one really good distribution strategy would be, hey, we don't have like this own token thing where you can't accuse us of misalignment in any way. We're literally returning all the revenue we make to the ETH holders. We'll even fork every single major protocol off of other chains, bring them onto our chains, and just have ETH as the asset that generates revenue from that. And that could be like an interesting way of going to market. But the idea really comes from this of trying to figure out what's a go-to-market for an ETH L2, because there's so many variations of them, parallelized, non-parallelized, like different kinds of virtual machines. And ultimately, like, who cares? Because the best one will be, like, the Coinbase will just continue to copying the best stuff. So it means that you have to be able to compete on distribution. So this kind of ETH Maxi L2, I think, would be a fun way to get some users on board.
Have you pitched this to developers as well?
I don't think I actually have. I just some random backroom discussion with investors.
All right, that's fun. What are the top 2-3 things that you are excited by and they occupy your time these days?
Yep. I would say it's kind of difficult to find like singular themes in a way. It's more about kind of seeing who are like a lot of the IDMAs, for example, if you think about like stablecoins, back when MakerDAO was being designed, you really had people really argued a lot about like the mechanism design of the thing and how exactly it works. And nowadays, I think people understand that design space a lot better. And then it's more about like go to market and really putting like the growth incentives and the pieces together to make like a successful business. So I would say you're kind of looking at all of these themes that already have been talked about in crypto, whether it's DePIN, AI, DeFi, L2s, compute networks, storage, whatever it is. You're kind of looking at all of these different things and trying to find the ways where people are putting them together in like the kind of optimal way to really become successful. Every now and then you do see like kind of these new wild out there ideas. Like I think I mentioned MetaDAO on Solana, which is like these decision markets. That's an entirely new concept, but it's also not new because the people who worked in prediction markets knew this paper, the very famous like economics paper from the 90s from Robin Hanson. That's kind of like the baseline for this idea. So it's like a new implementation of it, but like if you actually go into literature far enough, there are no new ideas in some ways. So I think right now it has been very much about the last 70 years has been about learning about how these different things may work. But now I think we have good ideas around that already. So it's just about kind of getting that into practice and having them actually work in the real world.
Right. And like when I talk to people who've been in crypto for the last few years, I see a lot of pessimism in them in the sense that, we are just circle jerking and it's just PvP and the pie is not growing and so on. So what do you say to those people?
Well, that sentiment immediately gets a lot better if prices go up by 10%. This is suddenly
exactly.
we're not suddenly it's all great again. So right. I guess the kind of last 8 months of sideways price action probably has not helped in that regard. But I would say there's an element of truth to that, which is that people are kind of tired of certain kinds of infrastructure and like investments being done kind of over and over again. If you have a new chain, then kind of deploying all the old stuff onto that new chain. And I think it's easy to get kind of disillusioned over time with that. And it's healthy to get disillusioned somewhat of that. So, but then that's ultimately, I don't think what is the most interesting part. It is like kind of this, you can get like tied down in, we have to have this great big idea that is actually the successful one that takes us to the next level. But I think it is more incremental than that. And it's kind of like fire dancer optimizing one thing and then optimizing the next thing and then optimizing the next thing. And like a stable or a lending protocol, like starting off and then tuning risk parameters, bringing on real world assets and kind of just slowly picking at it. And that's where the growth will eventually come from. So I think perhaps it should look boring for a while here. That's
For a while.
okay.
In terms of this idea that this cycle we have not seen too many good ideas from projects, either they are incremental improvements over the last cycle or just new iterations of the same project. I've seen this view that eigenlayer is something that has brought in a 0 to 1 kind of an innovation this cycle. What are your thoughts?
I think that's correct. Like you will always find, actually, if you look at the eigenlayer paper, there's a lot of overlap in the mechanics of it to the original Augur paper as well around security.
Right.
So again, there are no fully new ideas, but to an extent, I would say that one, like restaking, is kind of more out of the box, and it comes kind of it's a natural extension. I would say people talk about it in very technical ways, but I think the business side is more interesting, which is that it's kind of a market way actually to do the my ETH maxi L2 proposal, which I talked about, which was that, well, you take ETH, the assets, and you kind of expand its capabilities into other services, and maybe you'll derive cash flow from them. Maybe they'll be like, it's not ETH the base asset, but it's like a colored assets of the same thing that secures some L2 or whatever like that. So I think it's like a natural way that the market has found to extend ETH's capabilities into all these other things that are kind of being taken, quote unquote, by like other tokens. So I definitely think that's like a relatively new idea, but it's also one that has been long in the making.
So old idea, just a different way of implementing it.
Yeah.
A better way,
or like a pretty new way of implementing. People have talked about like not necessarily as much nowadays, but people back in the day used to talk a lot more about like crypto economic security and this game theory of, okay, I have $17 staked and I have this kind of value at risk. So what are the points at which, and we used to do a lot of those papers back in the day. We just don't do them anymore nowadays because people intuit those, I think, a lot better. But so it is an extension of that idea, but it is like a very interesting and cool thing to do.
You mentioned something very interesting at the beginning where you said that crypto is very good at distributing hardware. I think that's because we have incentives, and if you use that hardware, you get paid to do that, right? Or you get paid to employ that hardware. In that light, what do you think of Solana's phone, like in terms of direction?
Yeah, it's actually funny. I would say Solana phone, the DePIN playbook is you have hardware, you distribute it out to the world, like you said, with token incentives, you get people running it, and then hopefully you turn that into like a positive business at some point, and it's not just a money sink in a way.
Right.
So the Solana phone, you could argue did that accidentally in a way, where they ran the DePIN playbook, but they didn't have like their own token, but like people airdrop bonk and like NFTs and like some other stuff, which made it profitable to buy this phone. So I would.
Yeah, but for them, it is still not profitable, right? Are they even breaking?
Well, if you sell enough phones, like I suppose you could break even. So I say that with a little bit of jest, but it's like accidentally running the DePIN playbook. And there, I would say it's kind of hard to be super optimistic about, okay, this phone will somehow take over the world or anything like that. But it's again like these concentric circles of, well, if through whatever mechanism and through whatever airdrops and maybe there's like you release the third version of the Solana phone right at the peak of the next bubble, which means that you're able to pre-sale like instead of beginning you pre-sold like thousands and you sold 10,000, maybe I'll resell like a million of these things. And that does get you like a user base who has a very good phone to interact with Solana and like perhaps not even just Solana, but also other blockchain applications as well. People will use it through that mechanism. Maybe that pushes other service providers in the industry who are actually big to integrate parts of that stack into them, which kind of makes these apps even better. So yeah, I would say the end goal for that phone is not to really be like this great big world changing thing, but it will be to show a proof of concept and kind of get to a big enough scale that, okay, this is meaningful and the people using these applications actually can generate a lot of revenue to like the phone manufacturers and that they want to be a part of this ecosystem. And I think there it could work.
All right. What is your thesis on other fast chains like Sui, Aptos, and the ones that probably launching like Monad? Now that Solana has kind of firmly cemented that place, and with Fire Dancer, like the throughput even going further higher up, what's the whole game for these new chains?
It's definitely the case that Solana has been the most successful in, because even right now, Solana's not successful in the sense that the TVL is still on ETH L1, actually. Like, maybe you can argue that a lot of the activity can be on Solana or some L2, but the actual like TVL is still on Ethereum. So it has been really, really difficult to get that kind of position from Ethereum. Ethereum has been immensely successful, and much more so than anyone else here on kind of building out that baseline network effect. So that makes you think that it's actually very difficult to successfully break into that market. But there is another way of just kind of saying that, okay, if you find something with enough differentiation and the industry grows a lot, you could argue that, okay, like maybe 1, 2, 3, whatever the number is of these things will be successful. So I think that's the kind of lens I look through it, which is that there is no more 1000x like performance improvement coming. It's not possible by kind of the laws of physics, and that is the biggest advantage one could have to competition. But there are some other things you can do, and like the move language is very cool, and Sui's consensus mechanism is like very well done. It's a very beautiful piece of tech in a way, and maybe that's enough to kind of get a small, like a good positioning in a growing market, and maybe that leads to an outcome where there will be quite a bit of activity on this. So I would say like at the current market, what it is like today in terms of usage, there's no way for anyone to kind of break through. But if you take that positive view and think, oh yeah, there will be 1 billion users here, well, then some of them will break through, and there's not that much more to think about. So with those, you really have to focus on, well, who is kind of the closest to getting to that point, who has that momentum, because a lot of the tech ultimately, like we've talked about, is converging to very similar places. So it is about kind of building out those network effects.
Do you still write?
I try to. I haven't recently anymore, but I'll try to get back on my blog.
Yeah, because it's fun to read your stuff. So yeah, I mean, like after that Solana article especially, I was looking forward to something.
Thank you.
Does that help, you think? Like, how do you view writing in general?
I guess in the beginning, I viewed writing as something that helps me and helps kind of like put your thoughts really together. I think being a good writer is it's an underrated skill nowadays. People tend to write way too long and write very boring prose, it kind of bothers me. But so I think it's good in the beginning. Now I think it's like more about me being upset about something and I need to get it out on paper. So I have it, like the kind of inflation article, for example, comes from that place. So it's more about venting probably nowadays.
I hope you are upset about something soon.
Well, we're in crypto, so I'm likely to find something.
Likely to find something. All right. Okay, so that's all the topics that I had. If you have something that we can chat about, like, feel free.
No, I think this was great.
Yeah. It was great. All right. Thanks a lot, man. Thanks for spending the time. Like, I had a lot of fun.